Okay, everybody, it's me, Gregory Mannarino, and I want you to sit back. I want you to get comfortable because we have to talk about a few things. And I'm going to start off with the big one here. So right off the bat, this is my post-market wrap-up on this Monday, November 15, 2021. With that said, let's talk, okay? Semi-annually, the Federal Reserve releases a financial stability report. Okay. This is relatively common knowledge. Anyone can see this. Just Google it, okay? Federal Reserve Semi-Annual Financial Stability Report. I want to just touch on 3 points that the Federal Reserve is expressing concern about. And to me, this is pretty freaking stunning. I'm not going to make this big and crazy. I just want to read to you a couple of the important points here. Number one, all right, I'm going to read this to you, but none of it's going to be a surprise. It's just a shocking admission to me. So the stock market is experiencing, number one, elevated valuation pressures. Let's see. Let's just zoom in on that real quick. This guy's been explaining to you, and I know this, that you know already, stock market valuations make no sense anymore. Nothing does. It's a market that has gone completely berserk. All right. Fear of missing out, whatever you want to call it. This is the Fed rigging the markets, keeping them artificially elevated. Now here they are talking about elevated valuation pressures. Nothing matters anymore. I told you this a million times. When you have a central bank essentially buying it all, when you have a central bank essentially stripping risk out of the market because, again, they're buying it all, keeping rates suppressed, well, what would you expect to happen? You see, anyone with a single functioning fraction of a brain cell is going to realize that you would get asset bubbles. So what the Federal Reserve is saying here is, valuations in this market don't make sense. I mean, does that deserve a duh or a duh? Yeah, we all know that. But it's a stunning admission right from the Federal Reserve. That's number one. Number two, there are excessive, I'm reading this right off of the document, excessive borrowing by businesses and household is leaving them vulnerable to distress if their incomes decline or assets they own fall in value. There's another duh. Look, people have borrowed beyond their eyeballs, something called margin debt, okay, to participate in the freak show stock market. Again, driven by the Federal Reserve, who's gone crazy, keeping this market, in a hyper bubble, causing cash to move from one set of assets into another. Nothing makes sense. Distortions, it's off the Richter scale. So yeah. People are borrowing beyond their eyeballs like they always do. We've seen this exact kind of behavior at the top of every single market right before they melted down. So what the Federal Reserve is talking about just in these 2 points is, well, a massive stock market bubble. Now that goes on to point number 3. The Federal Reserve is saying that there is excessive leverage within the financial sector that increases risk. Another duh. People, you can't make it up. You cannot possibly do that. Hold on a moment here. I'm going crazy. So I think this is a pretty stunning announcement from the Federal Reserve, basically with their financial stability report saying, guess what? Things are not so stable. People, I've explained to you, and I say it every day, things are not what they seem all the time. This is a deliberate act. Everything I just read to you from the Federal Reserve's financial stability report, saying that, hey, things are not looking too good. This market could, suffer a substantial decline in very short order. This is all by design. Again, we must always remain vigilant. We must always have our eyes open. And really, that's what this is all about. I want to keep you and myself ahead of the market. Now let's talk about a few other things. Let's talk about the market today. So the stock market today didn't do anything. We finished about flat. Cryptocurrencies, a little pressure on them. Gold and silver, a little pressure on them. Crude oil, about $81 a barrel. The relative strength of the dollar today was higher. We saw bond yields also come up. And what did that do? That pushed the MMRI higher. Right now, if you want to have a look at the MMRI, it's about 96. Okay. What does this mean? Again, because I keep getting questions about this. It's very easy to understand the MMRI. The higher that number is, the greater the risk in the market. Now, we've seen a substantial move from like the mid 80s to like 96 last time I just looked. Again, MMRI, there's a link in the description of this video. It's a pretty big move in a very short period of time. So the market is saying, all right, hold on a minute. There is increasing risk here now. Let's go back to this morning. What did Morgan Stanley say? Morgan Stanley, a Wall Street mega bank, wants you to resist buying stocks here. Well, look, like I said, the MMRI is still in the green, showing low risk, okay, at 96. Personally, and I've said this several times recently, in this environment, really, it's almost like a hair trigger, okay? Because anything, again, going back to what the Fed just said earlier, what I read to you, I mean, look, things are really distorted. It should be obvious to you. And one of these elements could, obviously, at any moment, just go out of control. And that would set off a cascade of events that could cause a substantial and massive drop in the stock market, despite the fact that the MMRI is still in the green. Again, in this environment, I would be much more comfortable with the MMRI 90 or below. You understand? So, again, things are stretched all over the place with regard to this market. And we've had warning after warning. Now we're getting a stunning admission from the Federal Reserve. And they created this. Understand, look, this is not by accident. Everything the Federal Reserve is talking about in their financial stability report that is now unstable, clearly, well, they did it. And they've done it by design. Again, none of this is by accident. They keep rates suppressed now for over an entire decade, okay? Foster an environment of risk, meaning cash is making its way into the stock market now for over an entire decade, printing cash out of thin air and trillions of dollars, quadrillions actually, if you add in dollar derivatives, creating massive distortions across the spectrum of asset classes. And they write a report like this. They write a report like telling us that there are elevated valuation pressures in the market, excessive borrowing and excessive leverage. Really? Oh, imagine, can you possibly really imagine Greg Mannarino shock? No, because I've explained this all to you forever. So we don't need the dog shit Federal Reserve to tell us what we already know. It's just a shocking admission to me. All right, now I wrote down a few things I want to cover with you here. Let me go back. I don't know how much of this I'm going to get a chance. I'm writing stuff down all day for you. On a good note, I want to just bring you a little bit of good news, something I think a lot of you are going to appreciate, especially my Lions. If you go to my website, traderschoice.net, there is a link in the description of this video. I made available to anyone who wants it an absolutely, it's free as free can be, okay, a free download, 7 professional option strategies that every trader should know. It's free. I don't even ask for a freaking dime. Okay, so if you're interested in this, just go download it. Go to my website again, link in the description of this video, and download it. Even if you're not a trader, it might be something you want to just read through so you can maybe understand the markets a little better. Anyway, what else did we find out? So Austria is locking down the unvaccinated. This may be something we're going to see moving forward here. Putting them into some kind of like a leper colony, the unvaccinated, because we're causing all the problems. Because, see, the vaccine works so well. I'm just going to say, if they want to shut down my channel, go ahead. If the vaccine works so well that they got to lock up the unvaccinated to protect the vaccinated because the vaccine works so well. You understand? Just like masks were supposed to work so well, people, nothing is what it seems to be. This is a freaking new thing that's going on that I warned would happen from many years ago. Anyway, here, that's pretty epic, don't you think? And here's another piece of disturbing news here. So look, we understand that at least 4, possibly even 5, Federal Reserve presidents were caught insider trading. Now, talking about one here, Federal Reserve Robert Kaplan. Well, this man, he was, he just resigned after he was caught insider trading. The Federal Reserve investigated itself. You know that. They investigated itself. And they found that, oh yeah, there was wrongdoing, but we're just going to let these guys resign here. So, but this gets even bigger than that. The Federal Reserve Board of Governors is blocking this guy, Fed President Kaplan's trading records. In other words, you and I are not even allowed to see what he did. Do you think that's right? Because I can assure you that if you and I, let me put another perspective on this for you. Several months back, somebody out here, reported me to the SEC saying that I was manipulating stock prices by talking about specific trades to my rather large audience. Well, I had to answer to the SEC, Securities and Exchange Commission, for this, that's all I did. I was out here recommending, people look at this stock or buy this or sell that or whatever it might be. And I get a phone call here from the SEC. Here we have Federal Reserve presidents insider trading to the tune of millions of dollars. Oh, and nothing happens. The Federal Reserve Board of Governors is blocking access to his trading records. I mean, does this sound normal to you? I guess it does. This is the norm in the New World Order, the untouchables. They are freaking untouchable, these people. They can do anything they want to do, and they will get away with it and get to keep any ill-gotten gains. Me, I just make a few stock recommendations to people, and I get a call from the SEC. Do you think that, really, honestly, how many of you with a show of hands believe that any Federal Reserve president who is insider trading to the tune of millions of dollars is going to get in any trouble whatsoever? Put your hand down. Nothing will happen. It's so freaking real, man. I tell you, it's vomitous to me. It's so freaking sick. Anyway, you know what? I don't even want to talk about this stuff anymore. As usual, it gets under my skin and drives me freaking crazy. So in summary here, people, we get a shocking admission from the Federal Reserve. And you can look this up for yourself. Again, the semi-annual financial stability report pretty much outlines what you already know anyway. And we have rising risk in this market, not no risk. Again, a lot of people write to me and they look at the MMRI and they say, oh, there's no risk in this market. No, it just means that there's a low risk, And understanding the dynamics, the things that are going on here, and realizing that at one point this can all turn to shit in the blink of an eye. That's why it's so important, people, to be hedged. Right now the environment is clearly risk on. The stock market again is very close to new all-time record highs. At the same time, you need to be looking at risk off assets. So sure, you should be in the market right now. You should own large cap dividend paying stocks. If you're one of my lions, you should be setting up credit spreads on stocks or companies that are in longer term uptrends, credit spreads, selling puts against this stuff. I outline all of this for you in a lot of my publications, also available on my website, traderschoice.net, along with the free one that's out there. So take advantage of this stuff, people. And at the same time, you need to be in risk-off things: gold, silver, platinum, palladium, silver, my favorite of all time, and cryptocurrencies. You need to be somewhat diversified, If you're in any one asset class, oh, I'm all in on this, well, you're carrying around a lot of risk with you in an environment that really does not make sense anymore. Something I've explained to you literally since forever here. Valuations don't matter. PE ratios don't matter. Forward guidance. Does that sound familiar to you? It should. I've explained those exact things since forever. Or for those of you who would rather me say it, since time immemorial. And again, when you have, the Federal Reserve talking about excessive leverage in the market, excessive borrowing in the market, excessive valuations in the market, I mean, you got to be kidding me. In a normal market, when something like this would come out, you would expect the stock market to take a big hit. No, not today. Market just does nothing, shrugs it off. The market will continue to shrug everything off until it doesn't. All right. Now, you and I, we're not in the business of picking market bottoms or market tops. What we're in the business of doing is riding trends and getting ourselves in the right spot for when this entire thing rolls over. And it's going to roll over, people, so big and so incredibly huge. It's going to rock the core of the financial world. As a matter of fact, the core of the earth. People, as always, are going to be caught off guard. Again, going back to why you must be hedged here. Okay? So you don't have to worry about when that big event happens. And again, people, it's not the stock market, which we need to be looking at. It's the debt market. Henceforth, why? And I'm going to go back to it for the gazillionth freaking time. The MMRI looks at the dollar as a unit of debt and the debt market, obviously, as a unit of debt. You take this little thing and you make an equation out of it and you get a value. And that measures risk in the market. Henceforth, the MMRI. Everything I'm telling you right now is available right on my website, traderschoice.net. There is so much stuff there for you. I hope you take advantage of this, okay? I'm working as hard as I can. It's all free, too, for all of you. So utilize these resources. Start talking, okay? Talk about things like, for example, Federal Reserve presidents getting away with anything they want to get away with. Meanwhile, Greg Mannarino makes a few stock suggestions, and I'm on the phone with the SEC. Explain that one to me, okay? Look, there's them, and then there is us, and that is a fact. It's so twisted. It's so freaking twisted. All right, people, look, long video. I'm gonna get out of here. I hope I covered a lot of this important stuff for you, and it makes sense, I guess, in a world that has gone absolutely insane. All right, I'm out of here. Love you a lot. Share the video. See you in the morning.